Good afternoon. This is Chris Brecher with a Chart Patterns Mastery / Simpler Trading Free video for May 20th, 2025. What's this about? You're starting to see some divergences, but I'm not sure they matter that much yet. So let's show you what we're talking about. Number one, we know that the markets have gone up a lot of days in a row until today. They had gone up for like 6 days in a row. So that's one thing. On the other hand, what you're getting in here is definitely some divergences. So I just want to show, because a lot of people were talking about, oh, the markets were up 6 days in a row, you have to go down. Well, here you were up 8 days in a row. What's the difference? Number one, there was lack of resistance. Now you have a lot of resistance. Number two, you also had the transports in unison going up, where now they're starting to have a sell-off. So, and we're going to go over this for you in here. We're also going to watch that last time when the markets had all those days in a row up, the bond market was rallying. Now the stock market's had a lot of days in a row, and the bond market's gone down almost every day for 8 straight days. Big divergence. So you do have some divergences showing up, but the problem is longer term, you're still not seeing that kind of massive reversal yet. And one of the reasons is from what I'm showing you when it comes to buybacks. As you see in here, this is Goldman Sachs' estimate, is that you're basically at an all-time high with the amount of buybacks this quarter. So, and that's one reason the markets have not really come down. You know, I've obsessed about that and shown you a number of ways that buybacks do matter. And that when you get in the buyback blackout zone, which is usually when JP Morgan's earnings start, theirs start July 14th, around that. So you take 5 weeks prior to that. That's when companies voluntarily don't buy back stock 5 weeks prior to earnings. So the preponderance are in this area. They're in the area over here. That's about June 10th. Then you go to, let's say, Apple's earnings. So let's move that over. So you're talking about right here, just subtract 35 from June 14th, you get to about June 10th. And then you go to right when Apple has earnings, right there. What that means is not that markets have to go down. During buybacks, markets can go down. I'm just saying bearish patterns are more likely to work in that area. Divergences are more likely to matter. So right now we might futz around for a long time. This would also go on some of the other stuff I've showed you about sentiment cycle. So a sentiment cycle, a lot of years when you go down, what you do is you have this rally, and I'll put them, superimpose them. So basically what you get, let me see if I can superimpose it, make it really neat for you here. There. So you get over here, and you get the D and the F, like here. You get the sell-off, like you saw there. You get the next leg down, like you saw here. You get the panic, and then the short squeeze, and then you sort of waffle around for a long time. Go back to this. Same thing right now. You got this, you got this, you got this. The only difference, you're reclaiming that. And a lot of that is because the administration wants you to go up and companies have massive buybacks. So buybacks started to be legal again in 1982. That's when the secular bull market started. It's not a coincidence. So basically for me, we're just trying to find longs and shorts intraday. It's hard to do swing shorts, even if you have negative divergence, until you get to that buyback blackout area. On the other hand, there is something you need to watch, and that's this. I just showed you the bond market. So on the right, I'm going to show you the bond market again. And on the left is the S&P. So a lot of times funds, these 50-50 funds or 60-40, are half long stocks, half long bonds. If the stock market has done this since May 1st, like it has, just exploded since May 1st, right in this area, right here. But the bond market since May 1st has gone straight down. That means right now, All these funds are long too many stocks. I mean, this is 300 points. Holy cow. Look at that. 300 to 400 points. And that is 5 points lower on the right. So they're going to have to buy bonds and sell stocks. So next week, you could start getting some pressure to the downside. Now, I'm not saying it's going to happen this second, but I just thought I'd point that out. So that's what we're going to watch tomorrow. I'm telling you, the next thing to watch is this. I've seen it a million times. If you see the S&P doing this, and it's up in these upper echelons right here, and you have the Russell on the right, all the way down here. So one of them is way over the 200, one of them's under. In this type of environment with buybacks, you usually see the Russell play catch up on the upside. So I'm looking for individual small caps that might look okay on a chart. We called them an ND like that. I'm telling you, we're going to try to find more of those. Have a great night. Thanks so much for listening. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.